Welcome to the TAC Index AI podcast, February 19, 2026, where we blend TAC IP data, reports, and charts with the latest news and all things logistics with a focus on air cargo.
And honestly, if you were banking on a quiet post-Chinese New Year lull, this week's data, it has a bit of a nasty surprise for you.
Yeah, you'd think so, right? February is usually where the market, takes a breath. But looking at these numbers, nobody seems to have gotten the memo.
Not at all.
I was just looking at the global index, the BAI 0, and we're up over 4% just on the week. And that actually puts us ahead of where we were this time last year.
It's decidedly firm. I mean, the calendar says slow season, but the map is telling a completely different story. And that disconnect, it's showing up violently in one specific spot. You saw London, right?
Oh, it's hard to miss. London Heathrow, the BAI 40. It did just tick up. It screamed. A 22% jump in a single week. It's not normal market fluctuation.
It's massive.
Okay.
And year on year, Heathrow is up nearly 44%. But what's fascinating is where that cargo is going. This isn't some general, rising tide lifts all boats kind of thing. The data shows very specific spikes on lanes to the Middle East, Southeast Asia, and also Hong Kong.
Which implies this isn't just about demand. That looks like a specific problem. It feels more like a directional surge driven by a disruption, not just people buying more stuff.
Precisely. It implies capacity constraints or, a scramble for space on those specific routes. And it's rippling out.
It's not just London, then.
No, we're seeing a bit of a ripple effect across the West. Chicago jumped over 8% this week, and even Frankfurt is clawing back some ground, up about 3.4%.
And even Shanghai is holding the line. Despite the holiday, outbound Shanghai is still sitting 11% higher than last year, so the floor is just much higher than we expected.
It is.
But we can't look at that Heathrow to Middle East spike in a vacuum, can we? Because I'm looking at the energy markets, and the charts look, suspiciously similar.
That is the key connection. Absolutely. You just can't separate logistics from the macro picture this week. We saw WTI crude settle up nearly 5% to over $65 a barrel.
And Brent's back over $70.
Exactly. Brent is over $70.
And that's pure geopolitics, isn't it?
Yeah.
We had the peace talks between Russia and Ukraine. They ended with no resolution, which keeps the pressure on. But then you add in the rising tension between the U.S. and Iran.
That's the one. When you have military buildup near the Strait of Hormuz, traders, they stop looking at supply charts and start pricing in fear. That risk premium is back.
So, okay, let's connect the dots here. We have a massive spike in air freight rates from Heathrow to the Middle East. And at the same time, a spike in oil prices driven by tensions in the Middle East.
It's the same story told in two different data sets. The instability creates a floor for rates that might otherwise be dropping.
So it's either immediate fuel surcharges kicking in or just risk.
Yeah, or risk aversion, shifting how cargo is moving through the region. The geopolitical headlines are, almost instantly translating into logistics costs.
It's a pretty stark reminder that while the calendar might be saying seasonal lull, the geopolitical reality is creating a much hotter market than anyone anticipated. A headline in the morning becomes a surcharge on the invoice by the afternoon.
And that's the thing to watch next week, really. Does this risk premium we're seeing in the oil market solidify into let's call it a capacity premium globally? If these tensions persist, that spike out of London might just be the canary in the coal mine.
A warning for broader rate increases across the board.
Could be.
Definitely something we'll be watching closely. Until next time.